If you follow my channel, you already know that I've had great success with options trading. Due to its ability to take advantage of leverage and provide terrific short-term returns, there is no doubt that this is one of the best investment vehicles out there. So why are there so many people out there pushing dividends as the way to go? Before social media, you only heard about dividend-paying stocks from your grandfather, but lately, everyone is a dividend fan. You can't even hop on Twitter anymore without coming across 10 different accounts with dividends in their handle. It's ridiculous. Enough is enough. I think it's time we put options and dividends into the ring and let them fight it out. I think if we do this, we'll quickly see that options is the heavyweight champion. Let's take a side-by-side look at these two popular strategies and see precisely how they measure up against one another, and whichever gets the most points wins. Who are you putting your money on? Thank you for watching this video. But before we begin, if you could, please take a minute to subscribe to my channel. And if you enjoy this, make sure you hit that like button. Also, if you know someone interested in options, please feel free to share this video with them. Now let's get started. In this corner, options trading. Options trading, as you might guess, involves buying and selling options. These are essentially contracts that give the buyer the right, but not necessarily the obligation, to buy or sell a stock at a specified price within a certain period. When the plan is to buy, you go with the call option. If you're selling, you go with the put option. Now, a big reason why options trading is so popular that allows traders to generate significant returns from relatively small portfolio. It also provides an opportunity for immediate income. So if you're looking to maximize your capital efficiency, options are pretty hard to ignore. On the other hand, even as a proponent of options trading, it's far from foolproof. The primary downside? High short-term risk. This is because the same leverage that amplifies your profits can also magnify your losses. The other downside is that you need to be an active, present trader for options to work. There's simply no passive way to approach it. Of course, there are dozens of sub-strategies associated with options trading, but basically, it all comes down to properly executing long and short calls and puts, and managing your risk and reward tolerance as you go. I won't go into iron condors and butterflies here, but if you want to know more, I have an entire video on that topic, which you can find here in my channel. And in the other corner, dividends investing. Now let's take a closer look at dividend investing. This process involves purchasing stocks, mutual funds, or ETFs that pay dividends. The easiest way to describe this is portions of a company's earnings that are directly distributed to shareholders. Obviously, dividend investing is extremely popular among traders who want to generate a steady income stream. It also tends to be much more stable over the medium term. Of course, you've probably already picked up on the primary benefit. Dividend investing is passive, or at least generates mostly passive income. For most traders, passive income is the golden goose. You simply sit back, watch it lay eggs, and cash in when you're ready. And because the dividends keep rolling in at regular intervals, people who think long-term tend to be very positive on this method. That said, dividend investing is far from perfect. The biggest issue is that the upfront investment cost. That is, in order to generate significant profits, you need significant capital. Clearly, this can be a huge barrier to newer investors who don't want to put thousands into a stock just to get back a few dollars a year. Now it's time for the title fight.
Let's get ready to rumble!
Options trading versus dividend investing. Now that we know a bit more about these two contenders, let's see how they match up in a head-to-head, shall we? And since two trading concepts can't literally fight one another, the best approach I can think of is to list a series of desirable and undesirable attributes and then determine which of the two wins or loses in each category. What do you say we get started? Leverage. Again, leverage in investing refers to using borrowed capital, financial instruments, or some other technique to increase the potential return of an investment. In this matchup, options is the clear winner. In fact, the biggest pro of options trading is the high leverage, which allows you to control a larger amount of stock with a smaller investment. While dividends are beneficial, you can't leverage anything beyond what you put in yourself. Time investment. As we've previously mentioned, options trading is very active, while dividends investing is largely passive. After all, trading options requires constant market monitoring and a strategic approach to work. On the other hand, once you're invested in a dividend-paying asset, it requires little day-to-day management. Speed of return. We're going to have to chalk this up to options trading as well. Generally, dividend income tends to grow and compound over time. So if the underlying asset is pretty stable, you could set yourself up for regular payouts. However, it will take time and capital for you to get there. But with options, you can produce immediate returns. So if you like to watch your brokerage account go up every day, that would be the better strategy. Short-term risk. You can't just use the term risk when referring to a particular investment strategy. This is because every tactic has short, medium, and long-term risks to consider. For instance, options are much more volatile when it comes to short-term risk. Conversely, dividends are relatively safe in the short term, barring any major market downturn. Long-term risk. Despite being a more long-term strategy, dividends also boast more long-term risk. And this goes beyond the value of a particular stock declining. For one, it's possible for a company's dividend growth to not keep up with inflation, thus negating most of the profits. Also, did you know that companies can actually cut dividends in hard times? That would put a pretty big dent in your profits, right? So when it comes to avoiding long-term risk, options are the better bet. ROI potential. In terms of ROI, we have to rate both options and dividends as pretty equal. This is because so many factors are at play that there's almost no way to say one will generate more profits than the other. But if you look at the compounding effect of reinvesting dividends year after year, dividends becomes very lucrative over the long haul. Initial investment. Here's where that leverage argument comes back to give options yet another point. Any way you slice it, dividend investing is capital intensive. This means you need to invest significant amounts of money before your dividend payouts reach anything substantial. Options gives you a lot more opportunities to turn a little cash to a lot in a shorter period of time. Stability. Dividends generally offer a stable, predictable income. This is because they are often provided by stable, well-established companies. Still, that doesn't mean dividend investing is completely immune to volatility. The stock market is always in flux, and sometimes those fluctuations can hit stock values, dividend payouts, and more. A particularly nasty downturn can wipe out the dividends you've been building for years. On the other hand, unexpected stock price movement can quickly turn an options position negative. Sudden series of sideways movement after trending up or down can switch a winning strategy into a losing one. The reality is, holding stock over the long term is a much more stable approach to investing and allows you to avoid the effects of short-term sentiment swings. Dividends is the clear winner here. So which is better? That was pretty close, closer than this options trader thought things would end up. So what does this tell us? The way I see it, it tells us that maybe approaching these from a one versus the other angle isn't necessarily the right way to go. In the end, the question of which investment strategy is better depends on your risk tolerance and investment horizon. If you're comfortable with high risk, high reward scenarios and active management, options trading might suit you. If you prefer a more passive approach with steadier long-term gains, dividend investing might be ideal. And maybe you don't need to choose one over the other at all. The fact is, it's actually common for investors to use both of these investment vehicles. They'll use options for short-term earnings and reinvest that into dividend stocks for the long haul. I talk options. Options have been good to me. But I have a confession to make. I also hold dividend stocks. It's never been a one versus the other situation for me, but I had to let them fight it out so you could see what each one brings. I hope that by better understanding the nuances of each strategy, you can make an informed decision that aligns with your financial objectives. Whether you go with options, dividends, or both, the key is to always invest wisely with a clear understanding of the potential risks and rewards. Thanks for watching. If you have any questions or comments, please post them below. And be sure to subscribe and hit that like button. Good luck with your trading.